Hello everyone. In its recent meeting, the Monetary Policy Committee of the RBI decided to increase the repo rate by 50 basis points. Welcome to another episode of CA with CA. Myself CA Anakha and together let's discuss the current affairs of the Indian economy. In today's video, we will be discussing about the Monetary Policy Committee of the RBI and the very talked about term repo. And why was this in news? In its very recent meeting held on 5th August 2022, the RBI's Monetary Policy Committee decided to increase the repo rate by 50 basis points, making it 5.4%. Let's now look into what is the Monetary Policy Committee. After the global financial crisis of 2008 and the years to follow, the government recognized that there should be an institutionalized framework to maintain the price stability and thereby protect the Indian economy from the wrath of inflation. The price stability had to be maintained, keeping in view the objective of growth. So, by amending the RBI Act by the Finance Act of 2016, a statutory body called the Monetary Policy Committee was organized. The major task of this policy committee was to fix the benchmark interest rate or the repo rate. The RBI governor was the ex-officio chairman of this committee, which was a 6-member body. 3 members were from the RBI, that is the governor, the deputy governor and an executive director. The other 3 members were to be nominated by the central government. This committee meets every 2 months to review the macroeconomic conditions in India and fixes the policy rate or the benchmark interest rate or repo rate. The policy repo rate is now at 5.4%, which you can see from the slide, and you have so many rates above and below the repo rate. Now what is repo? Repo is the rate at which the Central Bank of India, that is the RBI, lends money to the scheduled commercial banks when they are in short of funds. Repo stands for repurchase option or repurchase agreement. The RBI uses repo as its key tool to regulate the liquidity in our economy, thereby controlling inflation. In repo arrangements, a short-term loan is provided to the scheduled banks by the RBI in exchange of any government security or treasury bills or any government bonds. Since these are short-term loans, the scheduled banks have to repay the RBI by repurchasing the securities already given to them. Hence, this is called repurchase option or repurchase agreements. Now, how does repo manage liquidity or manage inflation? Let's look into that. So, as I told you, the RBI on one side lends to the commercial banks at a flat rate called repo rate, or now it is 5.4%. So, the bank in turn can lend to its customer only at a rate above the repo rate. So, increasing the repo makes our loans costlier. So, if the government wants to restrict borrowings or control the liquidity, the RBI will increase the repo rate. In a scenario where there is deflation or the economy is not performing to the expected level, it will decrease the repo rate so that there is a lot of liquidity in the markets through the commercial loans which the people will avail from the commercial banks. This is how an increase or decrease in repo rate eventually affects all your borrowings or your EMIs, your housing loans, including your deposit interest rates. So, the various financial instruments like deposits or interests or loans are indirectly related to how much the repo rate is. This is why the stakeholders in the Indian economy look forward to these bi-monthly meetings of the Monetary Policy Committee wherein the repo is fixed. The intention of the RBI to increase the repo rate was to bring down the inflation from 6.7% to a manageable rate of 6% so that economic growth is ensured. So to test your knowledge about the RBI and the repo rate, here's a model question for you. Please comment your answers below. Click the link in the description to access our Telegram channel where we will be talking about this in detail. The explanation, the material and the answer will be given there. If you find this piece of information useful, please like, share and subscribe to our YouTube channel. That's all for today. See you with another topic. Happy preparation.